Welcome to the Accounting Success Podcast. Ian Wellham is a chartered accountant, helping other CPA firms maximize their profit potential and become the most relevant advisor to clients. To learn how you can add value, introduce new revenue streams, and move into high-value advisory services, simply go to www.haydenrock.com. On the podcast, Ian brings together successful accountants and industry thought leaders to share with you how they serve business owners and how you can too. And now, here is your host, Ian Wellham.
Hello and welcome to the CPA Success Podcast. With me on the call today is Jeff Sklar, Managing Partner of Sklar, Heyman, Hirschfield and Cantor, located in Belmore, New York. I believe that's on Long Island, correct, Jeff?
We are indeed.
Great. Well, welcome to the podcast. Jeff, first of all, thank you for joining me today. Now, I know you're busy, so I appreciate the time. I want to talk about your practice and some of the interesting things that you do. But first, perhaps you could give the listeners an idea about yourself, a little bit of background, and also about your firm.
So my background and myself and the firm are really effectively interchangeable. So I'm actually a third-generation CPA in the firm. I proudly can say that my grandfather founded the firm. My father is still a practicing CPA, though not as much as he'd like, but he still practices in his late 70s. And my son happens to work for our firm now. So I've sort of been brought into this, and I voluntarily jumped into the world of accounting and actually love what I do. So we have seen a transformation in what we do as an accounting firm, from what my grandfather did to what my father did to how we run the practice now. And we've, over a period of time, developed different practice areas, expanded the scope of services, limited some services. In addition to being a CPA, I'm certified in financial forensics by the American Institute of CPAs. I'm also certified in financial crime, certified in financial fraud, and I'm a certified anti-money laundering specialist. And a lot of those certifications came about of us developing new practice areas. So as I say to people quite often, and I do a little training and I do testing and I do seminars and I do speak publicly, I say to people quite often, I'm just good at taking tests, and that's worked out pretty good for me.
Right. So would you say, was it your father that kind of inspired you to become an accountant?
Actually, the running joke in my family was my father uninspired me to become an accountant and constantly said to me, don't do what I do. It's a long 4-month period. It's 12 months a year. And yeah. I fell in love, as crazy as it sounds. During my time in college, I would work part-time over the summers in the firm. You know, back then, the internships and all that fun and exciting stuff didn't exist as it does now. So to make a few bucks, I would work in the firm, and I loved it. I found it intriguing. And our practice at that point was primarily small businesses. So you would work hand in hand with the small business owner, and you would do tax planning and watch them grow. And to me, there was a satisfaction seeing a client who took a small business, maybe it's a small electrical contractor, a handful of employees, and watching him succeed financially and knowing that we had a part in it. I fell in love with that, and to this day, I still like doing it. To this day, I don't mind going back and doing a bank reconciliation.
That's great.
Or looking at a profit and loss statement for a small client and sitting down and getting my hands dirty. And I think as a managing partner, for me, that's incredibly important, because I always have my connect with the client. I don't want to have the disconnect between what we do, the other partners do under me, and my staff does to the clients. So for me, it's very important to maintain that connection.
So did you and your family talk accounting stuff around the dining table then, Jeff?
Interestingly, no. When I came to work at the firm, my mother's first rule was, you two are with each other all day. No one else in the family cares. So it ends
Great.
now. When you guys leave the office, you leave that office. And we've maintained that rule. I'm at the firm 30 some odd years now, and I've done that with my son, and those are the rules. When we leave the office, we leave the office.
Excellent. That's excellent. And I think your mom probably had the right idea there. So perhaps you could give me a little bit of some sort of idea of how your clients have changed over the time of when your father first started the practice to current day, and maybe what the future brings for your son.
Well, I think when the practice first started generations ago, it was generally small business clients, individual income tax returns, partnerships on a smaller scale, highly serviceable, maintaining, working hard with the client and developing it. My father evolved the practice to more of an audit practice where we did audited financials, and we had a couple market niches. We represented clients in the financial services industry, we represent clients in the real estate industry, and we represented a number of clients in the hospitality, catering, and restaurant areas. And that evolved, and we developed market niches. And as I say to people quite often, if you've got a broken ankle, you don't go to your general practitioner and ask him to set the cast. You generally go to an orthopedist. And I think our profession is becoming somewhat specialized. So the general practitioner is wonderful. He's got a grasp of all things. But I think you have to have industry-specific knowledge to best serve the client. So we've morphed that. And in the late 1990s, the early 2000s, we developed a consulting practice to provide work with some of our clients for regulatory compliance, in areas, some valuation work and some forensic work, financial forensic work, which were areas that were new to us, but we believed that they were emerging areas and we should sort of be ahead of the curve. And we've done that successfully. We like to believe we've done that successfully.
So how do you target those niche areas, and how do people find out about your specialized services or the niche areas which you work in?
Well, what we've done is we are active in trade associations in those areas. So if they're having a show, we will sponsor events. We will take maybe a booth once in a while. And a lot of it becomes word of mouth. If you've got one client in the food services area, and it may be a franchise food service, he's talking to another franchisee who's complaining about his accountant, and our client says, hey, listen, I've got someone that really understands this stuff. Maybe you speak to my client. We were able to develop relationships with, believe it or not, local bankers who were banking some of our clients, and they liked our work product. They liked our efficiencies. We invite them down to see our physical offices, and let's show you what we do. Let's walk you through the process. So we were able to develop and increase our client base based upon that. And some are national, outside of our immediate demographic area, which is the metropolitan New York area, and some are international, believe it or not. I've been lucky enough to travel the world on our consulting practice, and I've been to places like Cambodia and Kenya, which is quite often exciting and fun. But that's what we've done. So a lot of it is word of mouth, and I think that no matter how big or small a client is, it's all about the service industry. And as an example, for our firm, and this works for our firm, it doesn't work for every firm, we have a live person that answers our phone every day. So it's not an automated voicemail system. And if you ask for me, you're put through right to my desk. And the phone will ring and I'll pick it up. We will take a live message. So if you want to leave a voicemail, you've got to specifically ask our operator, can I leave a voicemail? But clients like that personal touch of having contact with a live person, with staff. We've also been successful that every client has substantial backup. So there's always at least one, if not two partners on every client, and there's a partner as backup, and then we have staff that's backup. So if I'm on vacation or holiday, someone else can answer a call. Someone else can speak to the client, and the client is familiar with that person. And I think that's important in the relationship side, and that's what has helped us grow our business.
So what do you feel that your firm does especially well outside of the personal touch? What are the things that come to mind that differentiate you?
Well, we like to believe we do everything well. But, you could ask former clients and they would say no, and we could ask current clients and they would say yes. we're not embarrassed or ashamed on a compilation engagement, an accounting general function, to say to a client, we don't know, but we'll get back to you. So as an example, I have a client of mine that's in the U.S. here that's in the car business. They own a new car dealership, and they've also got a piece of property. And they were talking about doing a 1031 exchange. And I clearly said to them, we can do it, we can work with you. However, I don't know enough about it. But let me bring in my partner that specializes in the real estate sector, that we can bounce this off him, and he can help us do this correctly so there are no problems. So as a firm, we're not hesitant to say to any client, we don't know a specific person in the firm, but we'll get you the right people. And I think that goes a long way with clients. So it's not a specific work product. And I say to clients all the time, really anyone can do a tax return. It's what are we doing above that tax return? How are we looking at what benefits the client? What makes sense? How do we structure a transaction? So as an example, another example would be we have a new client that comes in and they want to start a new business, and it may be a child of an existing client. My first question always is, what's your exit strategy? Mm-hmm. You know, when starting a business, no one ever thinks about exiting it, but we believe that that is a good way to set up the business. How do you want to get out of it? What do you want to do? How long do you want to do this for? We know you want to make money. We know it's going to be successful. But at what point do you say, gee, maybe I sell to someone else? Maybe I expand. What's the exit strategy? And I think that's an important concept from our perspective.
Yeah.
So it's those little intangibles. If you're asking me what we do well, that's what we believe we do best.
And on the flip side, what do you wish you did better?
Get staff. I think one of the recruitment is very hard. I think one of the biggest challenges facing not just our firm but every firm is staff. And I think that's a tremendous challenge. You know, and internally here, our staff, we joke, doesn't leave. They stay for years. You know, our staff is here for 10, 15, 20 years. But getting the right staff and getting the right fit is a challenge for us, as it is with most firms. You know, we're not that equipped to hire 15 students just graduating college and keeping them on for a year so they can learn. You know, one of the challenges we face is we'll hire someone out of school. They've gotten schooled with us for a year of practical experience, and all of a sudden a larger firm will come and make them an offer which their compensation package will be substantially higher than what we're in a position to pay them.
Right.
So to us that's a big challenge.
Yeah. So how do you find the right people? I mean, especially since you focus often in niches, do you find them with the right experience, or do you tend to develop them inside the firm?
We use both. We will develop staff inside the firm. You know, as I said, my son happens to work here. Doesn't work for me a lot, but his area, which he found intriguing, is in our regulatory compliance and analysis work. Less accounting, more consulting work. And he was a good fit there. Just turned out for us he was a wonderful fit. We have other staff that we've developed into audit areas or tax. And you know what we won't do, which we'd love to do, is be able to steal some of our clients' controllers. But that's a line that we clearly won't cross. Yeah. But you know, we do what everyone else does. We speak with the recruiters. We run ads. Word of mouth. We found some success where we've got moms that only want to work 3 days a week. Yeah. So we will bring them in, and it works for us and it works for them. It's really not a job sharing because as an accounting firm, they will have clients assigned to them. But we can bring in a number of different part-time folks that will compensate to us for the one full-time employee that we need. So that's been somewhat helpful. But I will tell you it's a challenge now. We're currently looking for staff, and we've not been able to fill the positions that we have. We know we will at some point, but it's a challenge for us. And as I said, in speaking to a lot of my peers in other firms, we all face the same challenge, and we will joke about it saying, well, I have a staff person, can I steal your guy or can I steal your guy? And none of us generally do, but it's a challenge that we all face right now.
Yeah. Well, the American Institute of CPAs published a report measuring the 5-year growth rate in various accounting services, and it showed that auditing and accounting services grew just 6%, tax services grew 17%, while the advisory and consulting services grew 91%. Can you talk a bit about the consulting and advisory service that your firm offers and how you see that as a growth area, perhaps?
Sure, and I'd love to. And for us, the advisory and consulting practice, and I would be very blunt in telling you this, there's a reason for the growth. It's far more profitable. They're generally one-off engagements. So for us, our advisory and consulting services will generally focus in financial crime areas. So we will work with generally financial institutions on developing their policies, their procedures, or in fact, we may do internal reviews for them, which are outsourced. Now, for us, we've been lucky because clients have retained us year after year. But if we do an internal review or a consulting job in that respect, we don't know if we're going to be brought back. Just because there's a lot of people in our space, and we actually had a client that we had worked with, we had a 3-year relationship with, we believed that they were very happy, but they changed some of their internal staff. When they changed their internal staff, subsequently the people that were brought in their own consultants, which was another firm. Well, that person was terminated, and actually 3 weeks ago I got a call from the CFO saying, we like the work you guys did. We think we made a mistake with the change. Can you send us a proposal, and will you be available in Q4 to do the work? So from that side, it's been very beneficial to us. One of the drops that we've seen on the accounting service side is just an advent of technology. And I've said this for 5 years. We've looked at this. We have clients that will have a controller, or they will have a very good bookkeeper, let's call them a QuickBooks advisor, where we were providing services on a monthly or quarterly basis. They're no longer needed because they've got someone internally that can do the work. So maybe on an annual basis we can go in and do a review financial statement, or we may do a tax return, and that's okay. And we've said to the client, look, we think that's a route you should go. Our fees have dropped as a result of that, but what's in the best interest of the client? And when you've been honest with the client and said, listen, we can cut your accounting fees, and we think we should by doing this, it's a positive. And though we've taken the economic hit, the clients are appreciative of that. So what might happen in that case, we may get a consulting engagement, advisory engagements from that. What we don't do is we don't do any investment advisory services. We stick to accounting. But again, our consulting would relate to regulatory compliance. We do valuation work. We actually now have developed a niche in forensic work, financial forensic work. So most of those are consulting engagements, and we do a lot in matrimonial disputes or divorce work. And again, developing a relationship with divorce attorneys. They're happy with the work that we do. They refer to someone else, and that's developed. So that's been a very large growth area for us.
So you mentioned that the advisory consulting services are much more lucrative. In your opinion, why do you think more CPAs don't offer these kind of advisory services?
That's a great question, and I believe that industry knowledge and specialization. With the consulting job, it's so easy to be wrong. If we do an audit, we've got technical standards promulgated by the ASCPA that we must follow. Those are the rules. A lot of times with consulting jobs, the consultant or the firm that's been retained may be flying by the seat of the pants. And a lot of times we've gone in there after someone else has been there, and we've internally said, oh my God, I can't believe the client paid for this work. It was so poorly done, or missed the target. So I think a lot of firms have not adapted to the times, for lack of better words, where you've got smaller firms, where you've got 3-partner or 4-partner or sole practitioners. They may not be equipped to provide consulting engagements, and they also may have impairments of independence and conflicts of interest. So I think that's a double-edged sword for a lot of firms.
Do you think there's some fear of making those mistakes that kind of has them shying away from that kind of work?
I will tell you, for me personally, it is. I am very hesitant and reticent to take on any engagement where we don't know that we have the knowledge. I think that is vitally important, because I think you're doing a disservice to the client, and I think you're opening yourself up as a professional for problems. Where you've taken on an engagement and you don't have that area of expertise, I think that that adversely affects the work product that you put out.
So when you have a client who's been a client for a while and you've been working with them on all sorts of different things, and they present you with a situation where you don't have expertise in-house, what do you do?
We will bring in someone or refer to someone that has that area of expertise.
Excellent. And I think that's the way of the future. I think there are many small, medium-sized CPA firms who could offer some of the services that you do, and you know yourself that you can't rely 100% on in-house expertise, because you can't know everything about everything.
And I couldn't agree with you more. And we have a different philosophy, and our philosophy is that we're secure enough as an accounting firm, as professionals, that we've done the right thing and we've done the right job with the client, that if we refer to an expert in an area, that we're confident enough that we're not going to lose the client, that we've done the right thing by the client, and that bringing in an expert or referring them to another professional is in their best interest. And I think clients like that transparency.
I think the clients really do enjoy the transparency. But I think it's also, as you mentioned, you tell them when you don't have the expertise, but you can bring it in from outside. How do you find those experts?
Networking, believe it or not, through the various associations, the New York State Society, the ICPA. So I actually sit on a committee, the Anti-Money Laundering and Terrorist Financing Committee for the New York State Society. So if I have an area where I may have a conflict, I would refer to someone on that committee who I know has area of expertise. And interestingly enough, I happen to be a golfer here in the States, and I know you from the UK. It's a sport that's beloved there as well. I belong to I play golf with a bunch of other accountants, believe it or not, and where I play golf, there are about 5 or 6 managing partners of other firms. So we're not hesitant to refer to each other, because we've seen the quality of work that we all do. So if I've got an area where I need to bring an expert in, I'm not hesitant at all. And some of these are some of the largest top 10, 25 firms in the country. But I'm not hesitant in the least bit to referring to them. So, for instance, we don't do any SEC work. But if we've got clients that need it, I've got a list of 3 firms. And we'll say to clients, look, we've got a list of 3 if we're going to refer. Here is who you should choose. And we do that for a very specific reason. If they're unhappy, well, they made the choice. They can't yell at me that they picked number 2 versus number 1. But I think it's important for them to interview different people and get a sense of who they're going to be working with in a specialized area.
So let's just change tack slightly. How do you like to work? And what I mean by that is, do you spend a lot of time with a few clients, or do you have lots of clients who you need to divide your time between?
Well, as a firm, me individually?
Yeah.
Okay, well, myself individually, and I often joke, I actually spend a third of my time managing the practice, a third of my time on the consulting side, and a third of my time practicing. So I have a handful of clients that I will work one-on-one with, but I keep my finger in with a lot of clients. So a third of my time in managing the practice will be making phone calls to stockholders or owners of some of our clients to make sure that everything's going well, to see, hey, how are things going? With the summer, where we're a little slower, I will take my time out and call up a client that I haven't seen in 3 months and say, hey, how would you like to meet for lunch? Let's just see what's going on. How are we doing as a firm? Tell me, are we servicing you correctly? Are we doing all the right stuff? So I will, focus my time in a practical manner working on, a number of clients, but I do reach out to a large number of clients always to maintain an involvement.
So looking at the business owners, what are some of the most common mistakes you see those business owners making with regard to tax or business planning or other general areas where they because it's not their business, they don't do the right things?
Well, your first thought to me is the most crucial: planning. We see lack of planning. To get them to really plan and to say, this is what I need. What do we need in Q4 for cash flow? Because we've got to increase our inventory for the next year's second quarter. How are we going to get there?
Yeah.
If it's a small, closely held company that might be a subchapter S corp, hey, how much are you going to take in distributions? You've got a very large line of credit with the bank, $1 million, $2 million, $5 million. I don't think it behooves you, which I would say to a client, to withdraw all of your current year's profits. Let's look at that. Let's see, how does your cash flow run out? But our biggest challenge a lot of times is where a client makes $100 and wants to spend 98 of it.
Yeah.
And I think that's a common thread, though I do think that clients have become a little more conservative since 2008.
Yeah, well, it's better that they only want to spend 98, not 102.
Well, we were very lucky, though, and one of the issues that we looked at with clients, and not that we're not smarter, brighter, better than anyone else. We're all on the same plane. But one of the things that we've done with working with smaller clients, non-attest functions, non-audit clients, is let's look at your business, and you want to maintain this over a period of time. So after 2008, when the economy took a downturn, a lot of our clients didn't go out of business. They weathered the storm. They were in a financial position where they had enough reserves, even if business dropped a little, where they didn't have to fire half their staff or close their doors or do a fire sale. So they were able to weather the storm. From our perspective, the feedback from the clients was great. And their answer was, you readied me for this. This worked out quite well. So, we can bring, as I say, a horse to water, but we can't make them drink. We can advise clients of what we believe, and we're open. We can make mistakes like anyone else can. But we can advise them. Sometimes plans can change. We can say, hey, we've done this, let's try this, this, and this. That may be best for you. And one of the best things that I've taken out in this industry is working with a lot of different clients and having the ability to see how different companies operate. You get the ability to cherry pick each one and take the best from everyone else and use that knowledge and expertise to help other clients.
That's great. So what kind of help and advice do business owner clients generally look for from CPAs today or from your firm today? And maybe how is that different from 5 or 10 years ago?
Well, I can tell you that what they don't look for from us now are investment advisories, questions, financial planning. Everyone's got some relative or a brother-in-law or a cousin or someone who's in that segment. So, and we've said to clients, we can't be all things to all people. But what they've looked at a lot of times will be tax planning with even companies like us, business succession planning. How do we move to the next generation? What is my way to sell my company? Or can you help me with expansion? Can we do projections? Where do we believe we're going to be? What are financing options? And as simple as, am I best off being an LLC when I set up the company? Should I convert to a C corp? Should I stay as an S corporation? Those are everyday questions with us, with clients. And there are things that we look at and we analyze and we give them our input. Again, sometimes they agree, sometimes they don't, but that's okay because we think that's important.
Yeah, and these are all very different questions from the typical compliance issues, which I think is if those are the things that the business owners want, I think it's an opportunity for CPAs in your practice to expand into areas which are more lucrative.
Absolutely.
So, on an industry level, where do you see the CPA industry heading?
I still believe that the path that we're on now, which is a lot of consolidation, I think that will continue. I think that you will see the smaller firms merge into a little bigger firm. If you ask folks that have merged their smaller firms into large firms, a lot of them have unmerged, or as they say, they've uncoupled. I guess that's the new buzzword. But they've unmerged, and they've said that, hey, it's not working for me. But we've had success where we've spoken with sole practitioners or one or two partners and either acquiring or merging firms in. And I think that's where we're going. I think that products like QuickBooks are here to stay. And I think that firms that don't recognize that and modify what they do for the client will be dinosaurs and they will be extinct because I think the revenue will continue to drop. I think, and as a result of that, I think the accounting profession, outside possible advisory and consulting services, which will be a growth area, I think there will be such a huge emphasis placed on 4 months of the year to generate financial statements and tax returns because the small business owner doesn't need or want the accountant all year long, except for January, February, and March to do his tax return, that there will be a tremendous emphasis placed on that. Now, I would like to hope because of that, billing will be able to maintain a premium level. Because someone will say, well, this is our busy time of year and we need to be paid our top dollar for that work because there's so much of it there. But we see every day another client moving to an in-house maintained system. And it's good and it's bad. A lot of times you've got a client maintaining things on a QuickBooks system and they don't know what they're doing. So come year end, we've got 3 extra days of work to clean up a mess. On the other side is, it's wonderful, and what we projected would take us 2 days of work has taken us a half a day to do, and the client's very happy because they're only being billed for half a day. But I think that will continue. I think the consolidation will absolutely continue. I think we'll just end up with a large number of medium to, I don't think we'll exceed the big 4, but medium to larger firms. And I think the sole practitioner really will both literally and figuratively die off at some point.
So what would you like to share with us, perhaps? Actually, I mean, this whole discussion's been great, Jeff. You've put some great stuff out there. I'm afraid our time's kind of coming to a close. What would you like to share with us that I didn't ask you?
What's our mission statement and our firm mantra, which is we tell clients, hold your professionals accountable. You're paying us. Ask us what we're doing. Hold us accountable for the work product and what we do. And I don't mean sue us in malpractice. I mean, when we've done our job and you've got questions, don't be hesitant to ask what we're doing. We have no problem explaining our work and how we do things and our methodology. And I think it's important for clients to gain an insight to what they're retaining someone to do on their behalf. I think that's vitally important.
Do you really find that clients are shy about asking questions?
Absolutely. And one of the things, and I know we're short on time, but I'll tell you very quickly, I say to people all the time, accountants are like doctors. And unless we commit malpractice, most clients really don't ever fire their accountant. On the audit side, it's different. But on the general side of doing a small business tax return and maintaining that relationship, unless we really screw up, they don't get rid of us because we have such intimate knowledge of them. And I tell clients all the time, don't be fearful of that. Hold us accountable for what we do. So yes, I do think they take a step back. And again, what I mean by that is you've gone to your doctor. Unless he's misdiagnosed that you have cancer, Really, we put up a lot. We sit in waiting rooms for hours on end. We wait weeks for appointments. He's a doctor, but he knows our body so intimately that we live with that challenge. And I think we also do that with clients from the accounting side, with accounting firms.
Those are very well made points, Jeff. Well, I want to thank Jeff Sklar, Managing Partner at Sklar, Heyman, Hirschfield and Cantor, for being so generous with his time today. Jeff, thank you very much.
Thank you very kindly.
If people want to learn more about you or your firm, what's the best way to reach you, Jeff?
Our website, www.sklarheyman.com.
Could you repeat that, please?
It's www.sklarheyman.com, and it's SKLARHEYMAN.com.
Great. Okay, there you have it. This is Ian Wellham saying goodbye for now. We'll see you next time on the Accounting Success Podcast.